Hi everybody, this is Gary Dean, and this is our nightly video report for Monday, January 30th, 2017. So we're starting to get a little bit of action. There's some volatility is starting to pick up. It could have been worse. Towards the end, we did see some buying, and I'll show you why it actually makes sense where they started buying. But the first thing we're looking at, this is just the 15-minute chart. So we want to see where this pullback came to compared from this low to this high. And you can see it came pretty close to the 78% retracement, which was something that I was giving as a short-term target, saying it should come anywhere from the 50% all the way down to the 78%. So we came pretty close to it. And now the trade that, I took half of it at the 22.99 and half at 22.76. So I can be cautious if I want and put a stop on half just above this line here, or just just kind of watch it. Now, I'm holding it right now because I still believe that there's more room to go, which means they'll probably give us some kind of stress tomorrow. But in any case, there's a gap right here at that 22.91. Good shot they're going to come up and close this before they let it go. We're in another one of those scenarios where we've gone up and below without having a single tick traded in the 22.87 level. So they gapped above it and they gapped it below. We've seen that a lot, and I don't really understand the rhyme or reason. So we have some resistance 22.84. Keep an eye on that. We didn't have any bullish divergences in place when this bounce hit, so that is giving us a hint that we may come make another new low, and that may set up some divergences and maybe form a little bit of a larger bounce. But if we look on the 60-minute chart here, we have the wave structure that's looking for a pullback to come anywhere between the 22.18 and even all the way down to the 21.30, and all that would be is a retracement from this low to this high. So I'm not saying we're starting a new bear market, but I'm saying from these levels, I like the short side better than the long side because there seems to be more points to the downside. So let's take a look and show you why the bounce made sense today, where it did, and it was pretty much expected. And I mean, as far as where buyers would be stepping in, and they would be the moving averages. So it made it all the way down to the 200-day moving average. That was at the 22.68, and then from there they rallied it up 12 points into the close. But now we're right at the resistance on the 50-day that we already broke below. So if they head up, I would keep an eye on this 22.90. I think that they would try to hold things down there, and then eventually come down and break this moving average. So the wave structure is looking lower, and then if we look at a daily chart, you can see we have the bearish divergences. We're still very, very overbought, and just a 23% retracement brings the S&P down to the 2185, but we have the moving average that's down at the 2157. So anywhere between here would make sense for this pullback to come to. And if it did, it's probably going to be setting up a good buy opportunity. If it breaks through that, then we could see it coming somewhere down into this 21.13 or even lower than that. But right now, I would say, okay, if we come down, my trade right now is just looking for some kind of decent little pullback, and then possibly look to buy. I'm not worried about the bigger picture and some larger moves to the downside. Right now, I just want to concentrate on the short trade. When we start getting into this 22.30 level, if we get there, I'm going to start taking some of the trade off the table. If they're going to just kind of hang around up here and bounce, it's just going to be frustrating, but I still believe the larger move to the downside. So with that, I'm going to give my voice a break tonight, and I will talk to you guys in the morning.